Ladies and gentlemen, welcome back to the channel. Tesla stock today did not do as well as a lot of people were hoping. Okay, the stock was red today. The other major indexes were up anywhere from 1 to 2%, mainly S&P, not up as much. Small caps especially were big winners. And as I talked about a lot on this channel, like Tesla is not a small cap clearly, but it has a lot of the same characteristics of a smaller cap company, right? Higher growth prospects, higher beta, more vulnerable, good and bad to rate cuts. Okay. Tesla did not trade as a lot of people had maybe expected. And in this video, I will explain why that is. But really what's coming next for Tesla. We can all say, okay, this happened or that happened or blah, blah, blah. We can all look to the past. But what's really important is what's coming next. And I think a lot of people may be taking what happened with Tesla today in context with, again, a broader market that was pretty strong and say, screw Tesla. Tesla has no punch, okay? Clearly, that's not the case. And I think this is setting up for a very strong end of the year rally. And honestly, some of my targets might be too low. I was calling for Tesla to be a $500 stock by the end of this year. We could be in the mid 500s if this kind of momentum does continue. And I want you guys to remember that right now is the worst 10-day period historically throughout the year, right? So dating back 100 years, 150 years, this 10-day period we're in every year is consistently the worst period. It started yesterday and extends into the final trading day of September. But seasonals sharply reverse and get better in October, November, and December. And I think what the Fed gave us was really just a green light for what's going to be a pretty euphoric market into the end of this year. Now, you have to understand what the Fed means. I think a lot of people, try to read into oil and bonds and all of this more sophisticated stuff. But you always want to take it back to a basic, right? Take it back to first principles. We had the Fed yesterday. What is the summary of the Fed? Like if I asked you, how would you summarize the Fed and what it means for markets in 30 seconds or 60 seconds? If you couldn't tell me logically what the Fed, did for markets yesterday, then you're obviously not going to understand any of the other shit, okay? What the Fed did is it really did greenlight this market into the end of this year. It confirmed that Wall Street was correct in how many cuts they were assuming. So there wasn't a big surprise there. And in the very short term, that is positive between now and year end. But what the Fed did is it continued to put a highlight on economic data, especially for next year, right? So the Fed says in their, most logical assumptions, they're going to cut rates at least 2 more times this year, once at the next meeting and then once more at the meeting after that. But then the Fed really told you, depending on what happens in 2026, it's up in the air. We might get 1 cut as kind of a minimum, or we could get more than that, depending on what happens with inflation, what happens with the economy. We all know that's the case, right? The markets already know that's how it works. If the economy somehow weirdly strengthens into the end of this year and inflation skyrockets, we're not even going to get 2 cuts, right? So there was really no change from how the markets already interpret the Fed and how the Fed makes policy by data. So from that perspective, the Fed greenlit this market rally and put a question mark on how many cuts we're going to get next year, predicated on how the data is. Now that is really the best case scenario you could have asked for. Clarity over the next, 3 months? We got clarity. We're going to get cuts. as many as the markets are pricing in. But next year, it's a little uncertain. So economic data is still going to be very important. Okay, but unless we get some kind of big change in the economic data, for good or for bad, we kind of already know the path for rates. Okay, and I think Tesla is in a prime position to benefit from this recent development from the Fed. Now you have to understand, Tesla has went up a lot recently. Anything above 70 on the RSI, you're technically overbought. The RSI is at 78.86 today. It was in the mid 80s and on its way into the 90s. You actually want to see days like today where Tesla falls a little bit, but the rally's still intact to reset that momentum. And that's exactly what it looks like to me. Now, we do have the shareholder meeting coming up November 6th. We do have delivery numbers coming out October 2nd. There's going to be a lot of catalyst, and I view positive catalyst for Tesla stock into the end of this year. And that's really what's going to help fuel this rally. Again, a lot of people even forget, Tesla has a lot going on with AI and robotaxi and, future AI plans and whatnot. But as the Fed cuts rates, as borrowing becomes cheaper, that tends to help autos a lot, okay? Autos, real estate. So it's funny, small caps are rallying today. Nobody thinks about the autos in terms of rate cuts. And that's something that will come back around. People will say, oh, wait, Tesla probably has some upside to deliveries, as rates are now confirmed to be coming down a couple more times. People think about real estate when the Fed cuts rates, but people don't really think about autos at first, okay? And I'm just trying to highlight that what we got with the Fed, what we're seeing with Tesla, is very bullish, but it's going to take a little bit of time for Wall Street to understand, okay? And to put the pieces together here. And Tesla was and did just go through a very strong rally. So getting a little bit of a reset in before we make our move higher again is actually very much a good thing. And at this pace, it does look like Tesla could be an over $500 stock by the end of this year. I had a $500 target on the stock for a while, but it could be higher than that. If we take a look at option activity today, a ton of it, very bullish. You had 408 different trades from hedge funds and institutions, totaling $766 million, with a positive order value of 88%. Compare this to yesterday. You had $441 million worth of trades. So today is almost double that. Positive order value yesterday was 85%. Today it's 88%. Look at the past week. You had 3,024 different unusual or interesting trades from hedge funds and institutions, totaling $3.66 billion. Get this, with a positive order value of 85%. That's very bullish. And here even today, you have 1.14 million shares that are being covered on. So, yeah, there's a lot of very positive forward positioning also happening today. Now, for tomorrow, we don't have much in terms of economic data. We really don't have anything at all. Some data out of Canada, Baker Hughes oil rig counts, but that's pretty much it for this week. I think tomorrow could be kind of an interesting day. We are vulnerable to any headlines from Trump or trade or policy or whatnot. But I wouldn't be shocked if tomorrow Tesla has its day. And some of the other stocks where we're kind of scratching our heads like, why are they not going up, but these others are, have a good day as well tomorrow. Now, take a listen to this clip on CNBC. It's only about 3 minutes long. It's from Wells Fargo that says equities should do very well after the Fed rate cut if no recession occurs. So take a listen.
Meanwhile, rejiggering their year-end S&P targets amid those new record highs and the Fed easing cycle that is now begun. Our next guest is no exception, raising his year-end target to between 6,600 and 6,800. Also saying, though, he expects volatility to increase some. Joining us now is Darryl Cronk, Chief Investment Officer for Wealth and Investment Management at Wells Fargo. Darryl, good to see you. Obviously, the market, it kind of got what it both expected and was hoping for, right? So you have the Fed tilted lower in rates at a time when, in general, the economy is hanging in there. How much is left to capitalize on that dynamic?
Well, actually, you raise a good point. I think a little bit this year, to be honest, Mike, but we think 2026 probably sets up to be an even better year for all the reasons that, you now have kind of the fiscal plane landed, if you will, with the one big beautiful law, no longer bill, right? So fiscal's kind of solved. If monetary policy continues down this path, right, corporate balance sheets are in an incredibly strong position. I mean, just look at the post-Fed. I mean, three things I looked at this morning, Mike. High yield spreads are at fresh lows this morning. There's only been a couple times in history where the Fed has cut interest rates and yet banks are at their all-time high. Usually banks would be sniffing out, through lower credit quality or delinquencies, defaults, if something like that were happening. If the Fed has to cut interest rates in a cutting cycle, that's not happening. And even this morning, equal-weighted tech actually finally set a new all-time high coming off of when it tried to do it in the summer of 2024. So the markets are telling you, hey, things are a go for the remainder of this year and into next year on more of this bull.
What parts of the market, then, do you think are better positioned here? I know that we were just talking about small caps. It feels like you are not quite in the camp that says that's the preferred vehicle.
No, we're not. I mean, small caps, there's two regimes small caps should do well, right? If you think about it historically. One is coming out of a recession as the early leader of the cycle recovery. And two is when you get a steep or aggressive Fed cutting cycle. And the latter is what we're getting right now. So it doesn't surprise us that you see near-term outperformance of smalls. But when you actually get into the Russell 2000, I mean, today it's a $3 trillion market cap indice against a $67 trillion U.S. stock market cap. Even if you compare that to tech, which is now $28 trillion, this whole idea that you're going to rotate from tech to small cap or something like that is, to us, a little bit nonsensical. And what's more important is the quality degradation that's happened in the small cap universe. Private capital's come in there and cherry picked a lot of the good companies and taken them back private. You've got almost sitting on top of record non-earners in the small cap. So we would fade kind of some of the recent strength here. In fact, we just went to an unfavorable or underweight small caps here about a month or so ago, and we think that's still the right trade to hold.
But yeah, let me know what you guys think about this recent rate cut from the Fed, how this may impact Tesla stock, and the end of the year kind of rally that we've been expecting, or at least most of us. Do you think this confirms it? Do you think this will amplify it? What's your target for the end of the year for Tesla, for December 31st? Where do you think Tesla stock's going to be? It is September 18th, and the stock is about $423 per share. 500 might be way too low. We could be pushing $600 by the end of this year. I wouldn't be shocked if that happens. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, check out the link down below in the description of this video if you want to come join the trading community as well. Have a great rest of your day, and I will see you in the next one.